What if I told you that soon you'd be able to buy a $400,000 house and have the privilege of still paying for that $400,000 house when your grandchildren graduate high school? If you were 25 years old and I said that statement to you, that wouldn't make much sense for a 30-year mortgage. But the U.S. has proposed, the United States has proposed a 50-year mortgage. 50 years. So you're 25, first-time home buyer. I want to get a 50-year mortgage. You would pay that off at 75 years old. I mean, the good news is you may only have one mortgage in your lifetime, but does this make any sense? So what we're going to do in this video, we're going to explore the history of the 30-year mortgage, which has been the industry standard for a lot of years. We're going to fast forward to this 50-year mortgage. We're going to talk about the differences and what it would cost you on a 50-year versus that 30-year mortgage that we're used to, and talk through the pros and cons on does this actually make sense? Is this the most beautiful tool for first-time homebuyers we've seen in ages? Or is this the biggest housing trap and personal finance disaster just waiting to happen? Let's dive in. So first, let's give a little bit of history about mortgages. And prior to the 1930s, the 30-year mortgage didn't exist. Actually, it was a 3 to 10 year, what they would call bullet mortgage. And that was essentially a balloon payment, and it would only be a period of essentially 3 to 10 years. And fast forward to what happened in the Great Depression, and people were unable to pay off their balloon payment. And a balloon payment, if you do not know, is after a certain period of time, you owe the remaining balance back to the bank. So you pay interest only for a period of 3 years. And then after that 3 years is up, you have to owe all of that back. And when you couldn't get new financing and you couldn't pay back the entire principal on that loan, there would be a foreclosure. And what happened in the Great Depression was mass foreclosures, and that was a real challenge. This is where the 20-year mortgage was then born. The 20-year mortgage lasted for a few decades, and then in 1956 is when the 30-year mortgage became introduced, and that was backed by the government entities of Fannie Mae and Freddie Mac, and so this became the secure product that we really have known for 70 years. Until now, things are beginning to change. Now, here's the beauty of the 30-year mortgage. The 30-year mortgage is something that you can prepay early. There's no balloon payment that's necessary. And so it does extend out, obviously, the payments over 30 years' time. Yes, we have 15-year mortgages that are options. Yes, there's alternative financing, but the 30-year really has been the industry staple and something that we really, the real estate world wouldn't exist without the 30-year mortgage as it is today. So why even propose this 50-year mortgage? We all know that housing has become a large crisis. Housing prices have skyrocketed since COVID. They've come down quite a bit, by the way. We know interest rates are, in the 6 to 7% range, so they're higher. We know insurance costs have been high. We know the overall cost of living has been a drain on an entire segment of the population, really the entire population, but it's affecting our younger people more than it is the established boomers, etc., because they don't have the financial means to be able to have home ownership. A lot of wealth is generated in real estate, and if the younger generation cannot participate in becoming a homeowner, guess what? They're missing a lot of the wealth generation that is possible over decades of home ownership. So now the federal government has come out and said, hey, we want to introduce this new program and it's going to solve everything. The 50-year mortgage. So now the monthly payments are going to be able to be lower. It's going to make it more affordable for people to be able to get into a home where they've not been able to do that in the past. And, by the looks of things, this is a good thing, right? Well, not so fast, because there are quite a bit of challenges that come along with this 50-year mortgage. Number one, you're going to have a mortgage for 20 more years, which means there's going to be additional interest that needs to be paid. When we look at the difference between the 30-year mortgage and the 50-year mortgage, we're almost paying double the amount of interest by adding only 20 years to make it a 50-year mortgage. It's quite insane when you really think about it. So let's take an example and we'll run the numbers on this just to prove the point. So if we take a $400,000 home purchase, which is pretty much median price in Lee County, Florida, where we're located, but also in the majority of the United States, and let's say that as a borrower, you're putting 20% down because you don't want mortgage insurance on this loan. Now you have a $320,000 loan that you need to be able to borrow, right? We're borrowing the $320,000 amount from the bank, getting our mortgage. On a traditional 30-year loan, the principal and interest payment here is $2,023 per month in that scenario, given a 6.5% interest rate. Now, if we calculate the amount of interest that's paid over those 30 years, that actually comes out at just over $400,000 in interest that would be paid on a $320,000 loan. Again, this is how standard mortgages work to date, so that's not out of the ordinary. Now let's run this example with a 50-year mortgage. In this example, we're going to use a 7% interest rate compared to a 6.5% because the lenders are going to be taking more risk than they would by having the additional 20 years than if they were having the 30-year mortgage. And this is already very common where the 15-year mortgage has a lower interest rate than what the 30-year is. So I think this is a fair assumption to say, hey, let's take an extra 0.5% and add that in. So a 7% interest rate on that $700,000. Now here's the good news. That monthly payment is lower. That comes out to $1,774 per month. So almost $250 less that we would be paying per month for a total mortgage payment. Now here's the tough part. The total amount of interest that we have to pay on a 50-year mortgage is almost $790,000. Again, almost double the amount of interest. Now, here's where we get in. Is this a good thing? So let's talk about the pros. The pros are more people would be able to get into a home because that monthly payment would be lower. No question, that is a great thing. We're all about that, super happy about that. Another pro is that it gets you into the game of home ownership sooner so that you have the ability to gain equity over time. That's a big deal. Also, with a 50-year mortgage, you can refinance at any time. So if you wanted the lower payment and then you get 5 years down the road, maybe you get a higher paying job, maybe you want to refinance at a lower rate for a lesser period of time, you could do that. You're not stuck in a 50-year mortgage. You can refinance out of that or sell the property. There's a lot of different options to where you're not locked in for 50 years total. But let's talk about the cons. I mean, obviously the biggest con is that if you keep that loan over a long period of time, you're going to be paying almost double the amount of interest, which nobody likes to do. That's not a great thing. Our second con here is that we all know that in the beginning of whether it's a 30-year mortgage, a 15-year mortgage, etc., you are paying, the vast majority of your payment is going towards interest. And so on a 50-year loan, the first 15 to 20 years, the vast majority of your payment is going to be paying towards interest and not towards principal. So you're not going to be able to build a lot of equity just by having the mortgage payment. Your only chance at building equity is that the real estate market is improving at a level to where you can sell it for more money than what you bought it for. So here's the deal. If the market goes down after you purchased, you will not have been able to build up a lot of equity and you could actually become in a negative equity situation, which is not good for anybody. And then we have the potential short sale foreclosure type of situation. So this is a great overview of everything that we've learned so far. If you've enjoyed the content, if you could do me a favor and like the video and subscribe to the channel. My goal here is to provide as much value and content about real estate in general, but also here in Southwest Florida where me and my team are located. But let me know your thoughts in the comments. Is this a good thing for us? Is this a bad thing? What are your thoughts on this 50-year mortgage? Have a blessed day, everybody.